Welcome everybody to the Everyday Pro Investor weekly YouTube series. You got Evan and Brian here. We're going to be breaking down last week as well as a few trades we put on and what we're looking for next week. So we'll go ahead and get started with some of the bigger pieces that came out related to the Dow Jones Industrial Average. I'd say one big thing is the Apple split and the effect it's going to have on the Dow. Evan, you want to talk a little bit about that?
Yeah, so Dow is based on the actual price of the companies that belong to it. So with the split, Apple's price obviously went from roughly $500 to $125 per share. So that's the reason why it's having such an effect on the Dow. And then also alongside that, I don't know if you had additional comments on that one, Brian, before I move on to the next segment there, the next bullet point there.
No, I think the only thing I would note is I think that takes tech in the Dow down by like 4% as a sector as a whole, just because of Apple splitting, the 4-for-1 split. So I don't remember the exact percentages. I want to say it was like the Dow was 27% technology. Now it's going to be 23% or something along those lines.
That sounds about right. Even with Salesforce being added and then having a huge week, it still it didn't make up for the Apple split.
Yeah.
So alongside Salesforce, they also added they removed Pfizer and Exxon and Raytheon Technologies. They added Amgen, Honeywell, and Salesforce. And again, we talked about it. Seems like for the past month now, we've been adding to Salesforce. We played a bunch of options on them, and we were expecting a good report. And you want to talk about the report?
Yeah, I can touch on that real quick. Let's see, they crushed earnings. I think they were more than double analyst expectations. They beat on sales. They guided for Q3 stronger than expected. The stock was trading at like 208 headed into earnings, and then I think the next day after earnings it closed at about 270. Just a monster move. Really shows all the investment that Mark Benioff's been making. People have criticized Salesforce over the years for spending a lot of money and investing, but this is why you invest, and you can now see it all coming to fruition here. And Salesforce is really just a dominant player. There was some concerns that with small businesses hurting right now, that Salesforce, they might have kind of a weaker quarter and maybe even the next couple, which we said even if that did happen, you don't leave this company. If it actually pulled back, it'd be a great buying opportunity. Well, you're not going to get that pullback now because they just absolutely crushed this quarter, and they're real strong guide for next quarter. So, you don't have a chance to get in. I think that if you start to see this thing pull back a little bit, it moved like 20%, wasn't it? Isn't that what the percentage was after earnings?
Yeah, it was. I can go look it up real quick, but it was up there.
Yeah, so I mean, if you can see this thing start to pull back, I don't know, if you could get it down around 225, which I'm not saying you're going to be able to, I think that would be a great entry point to be able to buy some shares. Fortunately, like Evan mentioned, we've been adding to this position, not only in the form of stock, but we'd also been playing it through options. We've made a lot of money in options, actually in both directions. We've been playing the trend with calls and puts. We didn't have anything on going into earnings, just given the nature of the premium being higher with the earnings call, and the fact that we weren't exactly sure what was going to happen. Wish we would have had some calls on. We looked at it, didn't pull the trigger, but that's all right. We're long this name through shares of the equity, and I'm happy that we're in it. Were you able to find that percentage move, Evan?
No, but I remember it was like 25% or something like that. It was quite a bit.
Yeah, no, I guess that makes sense. If it was at like 208 and it moved up $55 or something like that, that would be about 25%. Yep. So, anyways, moving on from that though, TikTok obviously been in the news a lot. It's a Chinese-owned company. ByteDance owns them. Concerns about data, privacy, and all that. So they went out and hired what was his name? Kevin Mayer. That's right. He's former Disney executive. A lot of people thought he might end up getting the CEO position after Bob Iger left. That didn't happen. So he actually moved on a couple months ago to TikTok to take over that company and be the CEO. Well, he actually stepped down midweek last week out of nowhere, And basically what that's telling me is that this company is going to get sold, at least their North American operations, because his big thing is he said, I want to be a global CEO. That's his only reason for stepping down, is he's not going to be able to run a global company like he wants to. So we've got, Oracle's, which I find very strange. I don't know why Oracle wants TikTok. You've got Microsoft, which I can kind of see a little bit, but then late in the week we had Walmart come in and they partnered up with Microsoft in the bid for TikTok. What did you think of that, Evan?
That was random to me. I have no idea why Walmart's involved, to be honest. I don't know.
Yeah, I spent some time thinking about it because I was trying to figure it out too. I mean, even Microsoft is a little bit of a strange play. Oracle to me is extremely strange. But I started thinking about Walmart, and the only thing I could think is like product placement and one click. You could click on things and go right directly to the link on Walmart, and them not having to pay for any of that marketing. That was the only thing I could think of. But is it really going to be worth the, let's call it $20 billion they got to kick in? And then also, who's going to own it? Is it going to be mostly Microsoft with a little bit of Walmart, or is it going to be mostly Walmart with a little bit of Microsoft? Really interesting development there. And I think that obviously Microsoft doesn't need Walmart's money to be able to pull this off, but when Microsoft said that they wanted to buy TikTok, I believe President Trump came out and wasn't a big fan of that. So I'm wondering their thinking is, if we bring Walmart in, maybe he's more prone to let that go through. But a quick note is this is a Chinese-owned company. China actually would have to buy off on the sale as well. ByteDance would need their approval to be able to sell the North American TikTok division to a U.S. company. So I don't, with the way things are with China and the U.S. right now, I can't see China approving any sort of sale to a U.S. company.
That's a good point. Market credit spread update we spoke about last couple of videos. We exited the midweek when it was clear the market was going to continue higher, so we went ahead and got out of those. And then,
yeah, unfortunately, took a little bit of a loss there because we thought the market was going to kind of pause last week, but it was probably about Wednesday when you realized that, okay, this thing's going to keep grinding higher, and we had to get out of our credit spread there. We did take a loss, but we got out soon enough that it wasn't too much damage, because later in the week it actually moved through the full credit spread and we would have lost quite a bit of money there, so we made the right decision to get out of that.
And then moving on to our second segment here, we got an update on Home Depot. The 260 put, 290 and 297.5 call spread. Paid about 70 cents for the contracts, and we sold them for $2, so nice little trade there. And then we did the XLF 918 25.5 call. We paid 38 cents for the contracts, and we sold most of the positions at 55 cents. And I know we're still hanging on to a number of contracts. With that one, the yield curve steepening with the Fed involvement, so big factor there. Any thoughts there?
Yeah, we saw, what was it, like 100,000 contracts traded on like Tuesday, I want to say it was, of this option. That's why we got in, real big volume. So that was obviously very interesting activity to us. We knew the Fed was going to be speaking. We thought it might kind of be a play on that, and I believe that it was, because when the Fed came out and they talked about how, basically they'll let inflation run hot, they're more worried about getting people working, and basically saying that the front end of the curve is going to be low for a while, and that actually sent the back end of the curve higher based on the things they were saying about inflation and letting it run hot. So that actually steepened the yield curve, which helps the banks out. Obviously, XLF financial sector, that made up of a lot of banks, Berkshire Hathaway. And so this yield curve steepening absolutely sent all the banks higher. XLF moved up. We made a nice profit on the part that we've sold. We're going to keep holding just in case that there's another leg higher and this thing gets up to 26, 26.50 in the next few weeks, and we can get out with even more profit on that remaining part of that position. Another trade we put on last week, which actually is setting up really nicely coming into this week, and I think this is a really good play for our viewers out there, is Wingstop. This is a name that we like the company. We've talked about it previously, but when you look at the chart on a short-term basis, I want to say the 3-month chart, maybe it's 6 month, but you can see a really distinct double top being put in, and the stock's about to pull back. It literally, to the penny, it got to 170 twice. That was the high, right to the penny, and then it started pulling back. So we went out, and we've actually got two different put spreads on here. We've got the 165, 150 put spread, we paid about 410 for that, I want to say. Right now it's trading a little bit above that, but you could still get into that for, let's call it 475. And you have a good chance that this thing's going back to 150 in the next few weeks, and that would allow you to collect, more than double your money. And then on that 155, 150 spread, Evan, what'd you say the pay on that was?
I think I paid like $1.25-ish for the contract. Max profits $5, and right now it's trading around $1. Last I looked on Friday, so you could still make some good money on that one as well.
Yeah, and when you look at the technical setup there, 150 looks like where it's going to get back to. So if that does, starts getting down towards that level, you'll be able to get pretty close to max value on that put spread there, as well as the 165, 150 put spread.
Yeah, and then another trade that we put on, I know we released it to our members service, but it was some calls on PayPal. We were monitoring their chart. PayPal's chart, it right now it looks similar to what Microsoft and Salesforce went through, the same style of trading that we had on those two companies over the past 2-3 weeks. It seems like PayPal's going through the same thing right now, and right now it's right up against the that resistance level. So we could have this week quite a breakout. I would say it's probably like 50-50 on if it breaks out or not. What are your thoughts there, Brian?
Yeah, I think that 50-50 is a pretty accurate statement on whether or not it breaks out. It's really battling, right at that 205 level. But when you look at the trend line here, it's really still very well intact. I could see this thing pulling back to 199, 200, somewhere in there, potentially. We're trying to play this, through some short-term calls. Hopefully it breaks out this week. If it doesn't and it pulls back the trend, I'd look to go out another week or two and buy, like the 207.50 calls at that point in time. But I'm hoping it breaks through here, and the calls we have on will pay out real nicely. But it's definitely a trade that, if you're not in it, I'd probably wait and see if it breaks out. If it pulls back to that trend line, that's when I would get in at that point in time. All right, moving on to our next segment, talking a little bit about a few market sectors here. So a couple weeks ago, we talked about REMX, which is the rare earth metals ETF. We said go ahead, get in that. I believe it was trading about $42.50, $43. Since pulled back down to around 41, and if you remember last week, we said as long as it doesn't break really below 40, you should be good. I'd like you to stay in this. Well, looking at it, it's still trading right around 41, 41.50, somewhere in there. But it looks like it's about to make its next move higher, probably get up somewhere around the $45 range is what I'm looking for. So if you're in this trade, I'd continue to hold it. If you're not in, it's actually a really good entry point in my opinion. The trend is still intact, as well as it looks like it could be setting up a cup and handle pattern as well. So a few technical patterns there that are really looking strong for this name. And if you're not in it, you could look to get in it now at this point actually as well. And then gold. So we've talked about gold and silver quite a bit over the last month and a half, 2 months. We've made good money on it. You look at gold chart, it's consolidated. I think it's about to make its next move higher here over the next few months. We got the election coming up. Volatility should start to move up. And I think there's a number of ways that you can play this. Evan, what are your thoughts on gold here?
I haven't checked the chart in a while. I'm looking it up right now. Oh yeah, okay. Yeah, I could see it. It pulled back, consolidated nicely, and it's looking like it's resetting. I could definitely see another move going higher here. I think you're right.
Yeah, and if you look at, let's say, like GLD, the gold miners, GDX, and the IAU, which is another gold ETF, they all have the exact same chart pattern. And I think that, like you talked about, they pulled back, they consolidated. You've got the 50-day moving average. When you look at it on the 2-year chart with the 50-day moving average, it's kind of pulled back almost right to that level. Not quite yet, but I think that's a positive thing. You're going to see this thing move higher off that 50-day. And one interesting thing to note is on Friday, even though the market was able to move higher, the VIX actually moved up as well. Now, normally, the VIX moving higher would mean the market's moving lower. And when you see when you see those two things correlate, where the market moves higher and the VIX goes higher, generally that means people are setting up for a pullback to happen. Things have gotten really hot. You look at the SPY, and if you look at it on like the 10-day RSI, it's way overbought. Some of the highest it's been overbought in the last couple of years. And I think a market move lower is obviously going to be bullish for GLD. Volatility moving higher is going to be bullish for GLD, GDX, IAU, and that's why I really like gold here. I think now is a really good opportunity to get in just based on the charts and the overall environment in the market.
That's a good point. We've even been trimming some of or taking profits on some of those SPXL and SPY holdings that we have in the company portfolio. For that reason, it's just we're getting up to those levels where it just makes sense to take some off the table. And
yeah,
go ahead.
That's a good point. Yeah, it's just a really good point that when you get up a lot, like you're seeing, and especially when the market's running really high, we're at all-time highs, it doesn't hurt to take some profits. And like you mentioned, we've been trimming in some areas, just kind of building a little bit of cash, because I do think a pullback is going to be healthy, and it's a good time to buy and get back in, because I do see the market continuing to move higher, most likely over the next few years. I don't see too many negative things that are going to drive this market lower. So a healthy 3 to 5% pullback is absolutely a positive, and it's a buying opportunity.
Absolutely.
All right, anything else you want to cover for this week?
I think that's it for me.
All right, and that wraps it up for me too. So thanks for listening, everybody. If you're on the podcast, if you're watching us on YouTube, we appreciate you watching. Please go hit that like button down below. Hit the subscribe button if you haven't already. Also follow us on Twitter and Instagram, Everyday Pro Investor. And if you like the things that we talk about, want to see how we're trading in real time, go get signed up at everydayproinvestor.com. You'll see our trading service there. You get to follow what we do in real time with text and email alerts. And let's go out there and let's have a good week.